The Brexit saga isn't over just yet. Months of negotiations and tough talk are to come as two sides decide what their relationship will look like in terms of trade, law enforcement, and aviation standards, as well as safety and several other issues to be hammered out. Let's bring in Alan Farkas, partner at international law firm Dorsey Whitney. He joins us from London. Thank you for being with us on The Move. You say that despite the risks associated with Brexit, there are actually several positives that could lead to, or at least make investing in the UK attractive to people outside of the country. Tell us about it.
Well, I just think that where we are now, the changes that are going to come through are going to take some time, and therefore we're going to see a continued low exchange rate for the purposes of the pound against the dollar, which makes investing in the UK a very positive aspect for particularly US investors. I think that UK assets will be viewed for some time actually in an attractive fashion just because of the exchange rate. And then on top of that, I think we're going to see the UK government making great efforts next month in the budget to stimulate the market, stimulate the economy, and see further incentives for foreign investors to come into the UK market with a view to making sure that there's just positive and good news for the foreseeable future.
Alan, of course, there's the old saw about the market not liking uncertainty, and the whole back and forth that was occurring over Brexit was a lot of uncertainty. So on a relative basis, things a little more clear now, but there's still a lot to hammer out before the end of the year, not including the trade deals between the UK and the EU and the UK and the US. Are businesses there making decisions, though? Do they have more clarity now to do so?
I think it's very difficult to say that there is clarity in the market in the UK. I think what people are just frankly relieved about is the fact that we're now heading in a direction, and people understand where that direction is going. I think that what we've suffered over the last 3.5 years, as you rightly say, is a great deal of uncertainty. I think that there are some fundamentals. I think that the UK government is determined to see a trade deal. It will be limited, I think, certainly in the first blushes come 1st Jan 2021. But there will be some fundamentals around that, in particular in relation to zero tariffs and zero quotas. I think that there will be certain markets that people will focus on, like the motor industry, like pharmaceuticals. And I think that those types of industries, people are going to be particularly incentivized to kind of go out there and make sure that there is a positive news story around that. And I think that there will be some areas of particular focus by the UK government in its negotiations with the EU.
Alan, you're making the bullish case, and I know we've been watching relative valuations go straight down for almost a decade now. The FTSE 100 is trading at a 50% discount to the S&P 500. It used to trade at a 150% premium to Europe. Is the coast clear now? We're tempted, but we've been tempted for a little while.
Well, here at Dorsey, I think that we're all gearing ourselves up on the M&A front to see some very positive news coming through. The US clients that I talk to are positive. I think that they see now that the certainty and the stableness of the UK government going forward, I think that they do see big opportunities in the UK. And, certainly, as I say, as a law firm, and my specialism being M&A, I think that we see, a real reason for UK investment, inward investment coming through. I don't think that we're going to see any major changes. I think we've got 12 months of lots of politicking, lots of grandstanding. I wouldn't basically take too much notice of anything that goes on the politics front until the late autumn. I think we'll see some outline of some real agreement around and some real understanding of where the direction of travel actually is going to be. But I think in the meantime, one should take the opportunities that are available, as I say, through exchange rate opportunities, etc., to basically just go in and start to reevaluate the market, knowing that we've got the real benefits of not only a stable and understandable and clear regulatory environment, but actually as we go forward, we're likely to see less regulation, less red tape as we move away from the EU and Brussels.
Jared Blicker here. I want to ask you about interest rate policy. If the Bank of England is on hold, is that a headwind for the markets there? And what's it going to take for them to cut? Inflation's about 1.3% right now.
Well, I'm not sure that I'm a particular expert in terms of the economies and the monetary policy, but I think that 1 minute we're hearing the interest rates are going to be reduced. I've just heard this morning that I've read an article which was suggesting that the next rate of interest is going to go up. As I say, I think we've just got to a view that the interest rates are in effect stable, and whilst it's not for me to necessarily say this from a lawyer's point of view, I think that these are attractive rates, certainly in terms of dealing with banks and international banks. I think that, generally speaking, when you see the fundamental economy in a strong state, I think that the interest rates at these levels are not and should not be a disadvantage to making investment decisions.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.